Good evening. Welcome to our Principles of Bookkeeping Controls revision session. This is session 3 of 4. My name is Catherine. I'm one of the tutors here at First Intuition. Tonight we've got a couple of tasks. We're going to do task 5 and then task 6, which is kind of like the sort of third quarter of this paper, if you like. So we're going to be looking at everything to do with journals, basically. So journals for payroll, journals for irrecoverable debts, journals for correcting errors. Oh, can you not hear? Sorry, let me just check my sound. Right, so where were we? Yeah, so yeah, we're going to have a look at journals tonight. So task 5 is payroll journals and write-off of bad debt journals, basically. And then your task 6 is where you are correcting errors using journals to correct them. So task 5, we have got another 10 marker. So it's another 11-minute one, like a lot of them have been so far. I think the 2 we looked at last time were 8 marks and 12 marks, but the ones before that have been 10 marks, and all of the rest on this paper from task 5 onwards are 10 mark tasks. So as a little reminder, I've got a task briefing before we have a look at some questions on task 5. So basically what we're doing with the journal is we are recording double entry for a particular transaction where we do not have a source document, something that we can kind of back it up with, and an entry into the accounts in a traditional way through like a day book or a cash book or a petty cash book or something like that. The other, so we're going to use it for that, and then we're also going to use it for correcting errors, which is what it says here. So what we're going to look at in this section, as we said, is those payroll transactions and writing off bad debts. You may also get a question where they ask you about entering opening balances, which actually isn't too difficult. It's mainly just knowing kind of what type of accounts the ones that have given you in the list are, and but the debits and the credits balance. I'm slightly concerned that it says my internet connection is not very stable, but hopefully it's going to hold. So the first thing that you might be asked to do in this task, I would be pretty confident they will ask you to do this, because it gives them a lot of marks. It's a more complex process to do, and that is preparing the payroll journals. You will usually have 4 different things to account for on this. So the first thing that you're going to be needing to do is to record what we call the total wages expense to the business. So this is the cost to the business for employing staff. Yeah. So as we would expect, we're going to have to include in this figure the gross wages. So that's what we are paying the staff. And then you will also have one or both of these. You're going to have contributions for national insurance from the employer's side. You're looking for that word employer always. And you may have pension as well. So any employer contributions to pension. And as you'll see in the task, it will all be listed out with the different figures. So you're looking for anything with the word employer in, and that will be a cost to them. We're going to have to send some money over to HMRC as well, because they want their share. So that might be the second journal you're going to be asked to do. And this is any tax, any national insurance. Yeah. So you're looking for things like your income tax, and then both portions of national insurance. So the employee portion and then that employer portion. So the thing with these figures is you may be using one of the amounts that you're given in the table more than once. It's not a case that you can say, oh, I've used that already, tick it off, I'm not going to use it again. As you can see here, we're using the employer's national insurance in the expense of the business, and then also the amount that's going to HMRC. And then the third one that you might be asked to do, this is the important one for all of us employees, is the amount that is actually going to be paid out to the staff and into their bank accounts. And this one, you're not just adding figures together, it's taking the gross wages, but this time you're going to be deducting the various taxes, national insurance, and things like that. So you're definitely going to have income tax, you're definitely going to have the employee national insurance. You may also get either pension, and again looking for that employee thing, or they might give you a trade union subscription or something like that. But again, even if you get both of those, you're looking to deduct all of these 3/4 that you've got here. They're all deductions from gross pay. So you're going to be taking them off rather than adding them in. And then finally, the fourth one you're going to get will either be to record a pension liability or a trade union liability, depending on what they've given you in the information. And what this is doing is just kind of pulling the amount that's going to go to either the pension provider or the trade union, the amount that needs to go to them, and we're just kind of putting it into the trade union liability or the pension liability to then be paid over at a later date. So you will get one of those, either pension or trade union. So how do we do this? Well, this is where we bring in the wages control account, which you will have seen in your studies. The wages control account acts as an account kind of that we hold all the figures in for our payroll. So we will add in at the start when we're recording that expense overall, we'll put the expense into the control, and then slowly we'll move individual figures out of the wages control account, so that at the end there is nothing left over in that wages control account. So it should be, the balance on it should be 0 at the start and 0 at the end. You're basically just using it to hold figures while you then push it out into the various places where the different bits of the payroll need to go. So we'll start off, we'll record the wages expense. I think I did in green. I'll try and keep it all the same so it all kind of matches through. So we start off, we're going to record the wages expense. So debit our wages expense. We're going to increase the amount of wages that the businesses have to pay out. So a cost to our bottom line, and therefore the expense is going to go up. And then we credit the wages control. And that's just to start that holding process. Of these are the funds that we've got to push elsewhere, and we're going to do that over the following 3 journals. We then need to worry about what HMRC needs, and this is where we start to push things out of the wages control account into the other liability accounts that we have. So we take the amount that we've worked out is going to HMRC, it's going to go out of wages control as a debit and in to the HMRC liability account or the HMRC control account, whatever they give you. It will be picking from a pick list on the account names. It's about just finding the one that fits. You won't have more than one to HMRC, so just pick the one that says HMRC and then whatever else it says. So that will then reduce the amount on your wages control account, but then you've got the portion that's going to go to the revenue separated out. We then need to worry about, for our the third journal is a very important one, paying the staff. Again, take it out of wages control because we're reducing the amount that's in there. And then credit to the bank because it's money going out to our bank account. And then for those of you that did the live classes, you'll have heard me say this before, but if you've not done the live classes, it is very, very tempting with that third journal to put the credit to net wages because you see that, oh, you've got to do the net wage. Oh, I've just deleted it. Don't use the net wages account. It's just there as a red herring. It's there to trick you up. Just cut out the middleman. Just think this money's got to be paid. It's got to go out the bank. Stick it going out the bank. And then your final one, which is this pension or trade union, whichever one they've given you. Again, wages control account, we debit to take it out of there, and then you're going to put it into the account for the type that it is. So if it's trade union, credit the trade union account. If it's pension, credit the pension. Just watch with the pension, if you do get a pension, don't forget to include both your employee and employer contributions if you've got both of those in the information that they give you. It's the total amount of pension contributions that need to go. The other thing they can ask you to do is to look at, you may be asked to do a bad debt write-off. So the double entry for this is very, very standard. It's the same process every single time. We're not doing anything different depending on the type of bad debt that it is. There's only one thing that we have here. So what we would normally, if we think about what we do with a bad debt journal, the first thing to think about is what would we normally do to record a sale, which is what we've got here. So we would normally say, right, we've increased the amount of sales. So sales is income, credit it. We've got more VAT that is due to HMRC. So that's a liability we're going to credit. And then we're going to debit receivables control account for a normal sale. Yeah. So when we come to write that off, it is quite tempting to just think, oh, well, it's fine. I'll just reverse all of that. I'll credit the receivables ledger, I'll debit the VAT, and I will debit the sales. You're not 100% wrong in saying that. What you now need to do, the only difference is we're still going to do as we've just said there, and credit the receivables ledger control account for the total value of the bad debt. And you're going to debit your VAT control account for the VAT. The difference is that we do not touch the sales account at all. Yeah. It would be incorrect of us to say that we're going to get rid of that sale because we did make the sale. So we could still say, yeah, overall, that's part of the sales we have made. The problem is that our customer, for whatever reason, has not paid us. It may be that they've gone into liquidation, or that's probably the most likely reason, but it ceased trading, all that sort of thing. So what we do is, rather than saying we'll just reduce our sales out, because that would mean that our sales figure would be incorrect, inaccurate, we have what we call an irrecoverable debts expense account, which is where we put the debit for the net amount. So this therefore means that we're just saying we made the sale, we didn't get the money in, so we'll put the expense to that irrecoverable debts account. So in the end, the effect on our final profit is zero. If we've got a £500 sale and a £500 irrecoverable debt, they're going to cancel each other out in the end. So that's how we do it, just to kind of keep everything. It separates everything out as well. So rather than taking things in and out of the sales account, we can see very clearly that we have had a certain portion of our expenses have been for bad debts, rather than having to go back to our sales account and trace it all through. It's a lot easier to see it this way. So this is one you can commit to memory. This is how you write off a bad debt. So the net amount goes to irrecoverable debts as a debit. VAT is a debit too for the VAT amount, and then our gross amount, our total amount, is a credit to the receivables ledger control account. So let's have a look at some questions. Now that I've done a bit of talking, we'll run through what we've just done in practice. So for those of you that have been with me for a little bit, we're back with Dippy Dogs Limited. Yeah. Let me just. Okay, so this is very, very typical of the question that you will get. So we've got Dippy Dogs. They are paying their employees by cheque every month. Well, that's lovely. We don't need to know that, but thanks for telling us. But it does say that it maintains a wages control account. So we know that's your clear clue of, oh, I'm going to be needing to put some things into a wages control account. You don't learn what happens if they don't have a wages control account, so you can be pretty sure that's what they're going to tell you in the question. And then we've got a summary of the various items of payroll that we've got below. We've got wages, we've got 2 portions of NI, we've got income tax, and we've got trade unions. We haven't got a pension, we've got trade union on this one. So the first thing that I would do on a question like this is I would be looking at kind of what amount do I need for each journal. So I've got to have a wages expense journal, HMRC journal, net wages paid journal, and then a trade union liability journal. Yeah, so we can see that we've got 4 journals to fill in, hopefully all on that page. Yes, they are. So this is definitely one for your blank paper in the exam to just maybe make some scribbles, make some notes as to what the amount's going to be, because you will get credit for those correct amounts. So I always think start with the easy bits and kind of move on. So start with knowing what you need to do. So what do we need for our wages expense? Bearing in mind we talked about, what are the items we're going to need for that? What do you think? I'll throw it over to you and you can let me know what you think it's going to be, what the amount might be, or what the things to include are. What do you think? Are you happy for me to just talk at you? Lovely. Yeah, thank you very much. Yeah, so we need that gross wages, the £6,000. And then anything with the word employer. That's the in this case, as employer's NI only, there's no pension. So we can just add those together. So we know that the amount that it's cost the business to employ staff is 6,750. Next bit we need is the amount going to HMRC. So what do we need for that? What are the things we're going to be including with that one? Yeah, definitely. I've seen someone say we need both portions of the national insurance. Yeah, because that's a form of tax. And then our other tax is the income tax, which is the 1,000. I'm going to try and squeeze it all on. We've got 1,500, 1,750, 2,250. Yeah. Next one is the amount that's going to go to the employees, the net wages. What do we do with this one? We'll start at the top. We know we need those gross wages, don't we? We've got quite a few things for this one. Yes, spot on, well done. Yeah, so take off the income tax. We see these deductions on your payslip, don't you? See the income tax going out the window, see the employees' national insurance going out the window. And the other one, which I can see was mentioned, don't forget that the trade union fees need to come off as well, because they are a deduction. So we've got 4,500, 4,300, I think we get for that one. Off a rough bit of maths off the top of my head. Not the employer's NI. No, that's the cost of the employer, not the employee. So you only want things with the word employee. Oh, so yeah, it's because it's taxed that basically if you're an employer, it's not just the government don't just want you to employ them, they want you to pay a portion of national insurance as well. But that's not a deduction from the employee. That is just purely the cost of the employer. And then our final one is just the trade union liability, which is just that £200. Yeah. If that was a pension instead of trade union, you may be looking to piece together employees and employees pension and employer pension, but we don't need to do them in this case. So we now know what amounts we're going to use for each journal. So the first journal we're going to look at is our wages expense recording. And we know the amount for this is going to be 6,750. Anyone want to stab a guess at what accounts we're going to use, what we're going to debit, what we're going to credit? Debiting. We're definitely going to have a debit, we're definitely going to have a credit. So we know that. And we're gonna Yes, credit the wages control. Well done. Actually, I should have said you've got a pick list here that you can pick out ones from. That helps. And then we're going to debit the wages expense. Yes, so we are increasing the expense the business, and then it goes into wages control to hold before we then do the next bit, which is to push it all out. So the next one is our HMRC journal, and we know the amount for this is that 2,250. We're going to have a debit and we're going to have a credit. What are we doing for each? Yes, spot on, well done. So yeah, now we start to pull everything out of wages control. So that is a debit. And then we're going to credit the liability account, which is the HMRC account. Yes, well done. Yeah, really great to see thought process coming through there. So then our third journal, we've done B, we're now on to C, which is the net wages paid. And the amount for this was that 4,300, wasn't it? Yeah, there we go. So what are we doing with this one? I know the pick list has disappeared off the top of the account. What we're going to debit, what we're going to credit. Yes, spot on. Well done. Yeah, credit the bank. Don't mess about with net wages. Just go straight for the bank, and then wages control. It's another debit. It's another reduction on that wages control account. I can spell it. And then the last one is the trade union fees, which is like £200. What we debiting, what we crediting on that one. Yeah, another wages control debit. We're spotting a pattern here, aren't we? And then trade union fees or trade union liability, whatever they call it. What they call it? Just trade union. For about £200. Yeah. Another thing you can do on this task, and again, it's something that I looked at with the live class learners, is to draw yourself a little T account for the wages control and pop in that initial credit entry that you have in journal A, and then just watch all the other debit entries come out for B, C, and D. And then you can make sure at the end that everything has come out and you've done it all correctly. Right. Let's have a quick look at a bad debt write-off. Okay, so we've got a customer called Barmy Budgies Limited, which has ceased trading, and they owe Dippy Dogs the amount outstanding shown in the receivables ledger account below. So we've got to work out what they owed us, what they owe Dippy Dogs, and then we'll do the write-off. So what do they owe? What do they owe? We work that out first of all. What do we think the amount is outstanding on the account? So it's just a case of balancing off the account for this one. They might ask you to do this in the exam. So I think that they owe us 624. Yeah, well done. Oh, this is hard because we've got to write off this debt, including the net amount and the VAT. Yeah, so we've got, this is our gross amount. Yeah. So you've got to be able to work backwards and split out your net and your VAT, which is, so I'm going to explain this down here. Next, we've got 624. Just in case anybody did get kicked out of the original session, I don't know why it kicked it out. It decided it was going to just end it automatically, which was not very helpful. So yeah, I was just explaining about how we calculate this, what we need to do. It does say for this bad debt write-off that we've got to work out the net and the VAT as well. So what can we do to calculate what we need for this? So we can assume that your VAT is 20%. because it says at the beginning of the exam, assume that is 20% unless they tell you otherwise. They have not told us otherwise, so we need to just assume that it's fine. That is 20%. So you can do this one of two ways. You can jump down and get your net straight away by taking that 624 and dividing it by 120 and times in by 100. I tend to just divide by 1.2 to get 520 for the net, and then you can work out the difference to get to be your VAT. The good thing with 20% VAT is that you can, as I've seen in the chat box, people are saying you can divide by 6, and that will get you your VAT figure. Yep, so you can either divide by 6 to get that one, or you can divide by 1.2 to get that one. And that's what I would do. I can see that I've got a few answers where the VAT is not 104. If you do that gross figure and times it by 20%, that will not be correct, because VAT is calculated upwards from that net figure. Yeah, so you can't. 20% of the gross is not the same as 20% of the net. So just be aware of that. So we've got our figures. Okay, so can we remember what, using our pick list that we've got here, first of all, what are the accounts we're going to use and what do we need to debit, what do we need to credit? I can see we've got a debit for VAT, for the VAT amount, which is correct. Yeah, spot on. The receivables ledger control account gets the gross amount. Yeah, we're going to write it off from there. And can we remember the account we use for the net? Yeah, spot on. It's that bad debt. I'm going to just put bad debt because it just saves time and space. Yeah. So we know we're getting. I saw someone said about debiting the VAT. What are we going to do with the other two accounts? What are we debiting and crediting? You want to make sure you've got a balanced double entry. So make sure you are, yeah, spot on. So yeah, we get a credit to the receivables ledger control account to remove the asset that we had of the money that was outstanding, and then therefore you can see that we've got to put a debit into bad debts, which is the expense. Yeah, so if it helps, you can sort of think that's an expense account, and that will push you in the right direction. So that is your very standard bad debt write-off. Right, I know we're going a little bit longer than normal on this one, but just because we've had a few issues with tech and whatnot, and I do want to do task 6, I promise. But if you can't stick around, it's fine. You'll get the recording anyway. So we're still with journals for task 6, but now it's about correcting errors. Yeah, another 10 marker, so another 11 minutes to spend on this task. Yeah. On task 6, obviously you'll remember from your studies that you've got kind of two sort of categories of errors that you may need to look at. One's that the trial balance will show and one that the trial balance won't. On this one, we're very much looking at the ones where maybe the trial balance isn't balancing, you know, or ones where where it's maybe they've told you what the error is and you've got to correct it because the trial balance doesn't balance. So you've got kind of two things to do here. If you've got a trial balance that doesn't balance, then we're going to have to get a suspense account in place to make it balance. And later on in the task on this exam, you will be asked about putting a suspense account together. But this task is assuming that has already been done for you. Yeah. So the suspense account will always go on the side of the trial balance that had the lower figure, because it needs to plug the gap. Yeah. So as it says there, if your debit side's 10,000 and your credit is 9,000, you need to have a suspense account with a credit balance to bring that credit balance overall up to 10,000 to match the total of debits. Yeah. So we may need to, as part of our error corrections, include the clearing of the suspense account once we've figured out what the error is. And the question will tell you to say, oh, now we've done some investigation, we've found that this is the problem, or the problem is in this section and we need to therefore correct it. Yeah, and it's really helpful with this to think about kind of a should versus did situation. Yeah. So if things had been correctly done, what would the posting have been? What would we have debited? What would we have credited, or whatever? And therefore, and then what did they post? So, you know, what has gone wrong? And therefore, what do we need to look at between the two to make it so that the entries that we did post then become the entries that we should have posted? So it might be a case of removing the incorrect entry and putting the correct entry in, and then clearing that suspense account. Yeah, and that's that bit in that assess smart there. You may also be asked about errors where the trial balance hasn't revealed it, where you've got a balanced trial balance. So you won't need a suspense account with that, but you will still need to correct the error, and you can still do it in a very similar way as taking the incorrect entry out and posting the correct one in. Yeah. Also in this task, you may be asked about different error types. Yeah. So you might be asked, you know, this is an error. What type of error is it? Yeah. So, and again, these fall into two categories. So first one is ones that the trial balance will disclose. So what errors that will result in a trial balance that does not balance? Yeah. You've got three main ones here. So you've got, first of all, the single-sided double entry. So it could be that, you know, out of a transaction where you're expecting to have a debit and a credit, only the debit got posted. So you know that to correct that error, you need to basically post the credit side of the entry. You may get one where they've done both sides of the double entry that's been posted, but they've posted each of those lines as a debit when it should have been one debit and one credit. So again, in that case, you would need to remove the incorrect debit entry and post it correctly as a credit. And that's one of those ones where you have to double up the amount to remove the incorrect and post it correctly in the same sort of truth, if you like. And then the other one you'd get is if you've got an unequal double entry. So you've got an unequal value, and as it says there, you might have a debit entry of 100, but the credit entry, they've missed the extra zero off the end and they've posted it as a credit for 10. So you've got a £90 difference, and it would just be a case of, again, putting in a credit entry of £90 to bring it to match the debit. So those are quite easy, I think, those ones, and easier to sort. They're definitely easier to find anyway. The other category, and there's more errors here, and they have names that might not necessarily seem obvious at first case for some of them. So these are the errors where the trial balance will not show it. Your trial balance will still balance even with these errors in there, which is more problematic because you've really got to go through the fine-tooth comb and find where the problem is. So first one you've got is your error of omission, and that one, the clue is in the name with that one. The transaction is missing both bits, like the invoice hasn't been posted, or the receipt's not been posted, or something like that. It is completely missing. Both sides of the double entry never happened, and it's gone. Yeah, so it's like it never existed. Yeah, so with those, it would be a case of posting the invoice, posting the whatever it is, just as normal. You don't have to do any removing or anything like that because there was nothing to remove in the first place. Then the next one where we've got one of our weird named ones. This is error of commission. Yeah. So this is where we have posted to the right section of the account, i.e. asset, income, liability, expense, but maybe the wrong type of expense account within it. So we like to make sure we're keeping all of our records just so there needs to be a true view of everything. So if we were going to post, we've got maybe a telephone expense, but we've actually posted it to electricity expense, that means that we haven't got the correct figure recorded for how much we spent on our telephone bills, and our electricity bills are showing higher than they should be. So it's not an accurate figure for those two accounts. So that is exactly what your error of commission is. So with that one, it's a case of remove it we've got, in this case, remove it from the electricity expense account and pop it into the telephone expense account. It's in the right place. The other one that's similar to error of commission is your error of principle. Yep. As it says, this is a more serious error. We talked about this in the live classes for those of you that were there. It's like error of commission, but what we've done is we've posted maybe one side of the transaction to the wrong, completely the wrong type, completely the wrong category of account. And the best way to explain this is if maybe we have, I don't know, we've maybe had some replacement tyres for our delivery van, which would normally go under like vehicle expenses or something like that. But instead, it's been posted to the motor vehicle asset account. Yeah. So what that does is it means that our expenses for motor vehicles are too low, but more importantly, our asset figure for motor vehicles is too high, and that can be problematic. So really, really important that we are spotting those and correcting them. But they love to potentially ask you kind of what type of error is this and give you an example. And I would be, again, pretty confident that they'll give you either an error of commission or an error of principle to have a look at. You've got error of original entry. So that's where you've got the figure is wrong for both portions. That's different to your unequal double entry that we saw in the other section. Yeah, so both your debit and credit, maybe you had an invoice for 540 and both debit and credit lines, you posted it to equal 450 instead because you had a typo. So again, that would be a case of removing it at the incorrect figure and popping it in at the correct one, or adjusting for the difference. It depends kind of how many lines they give you in the journal for that one. And then you've got compensating errors. This doesn't happen a lot in real life. It's just that we've got maybe an error on the debit side from one transaction and an error on the credit side from another transaction, and it's the same amount, and therefore it cancels it out. It's rare that that would happen in the real, but it can happen, and it probably, it's more like happening in an exam than in the situation. And then your final one is your reverse double entry. So this is where maybe you've recorded a customer receipt, they've sent you some money, and normally you debit the bank and you credit your receivables out of control account, but in the end you credited the bank and debited the receivables out of control. Yeah. They're quite difficult ones to spot because you've got to be quite hot on knowing what the correct procedure should be. And again, it will just be a case of, with reverse double entry, you'd need to adjust for double the amount, because it's not the wrong amount, but it's on the wrong side of the account. So you've got to move it over, and it's kind of a two-step process. Right, let's have a look at an example, and then that will round us off nicely. There's not a huge amount on this one. So we've got a suspense account's been opened with a balance of £4,500. They don't tell you whether it's a debit or a credit. You will be able to work that out through the task. So they have managed to trace the error back to the purchases daybook. Yep. So they tell you that the error is somewhere in here. You've got to work it out yourself. It's a case of, I would check each transaction that way, make sure that they've calculated the VAT and everything correctly, added it all up, and then I'd be looking at each column, adding it downwards just to make sure that they have done it. Now, this one I think does kind of stay square in the face, hopefully, if you look at those figures, because adding up those, that does not equal anywhere near 6,100. It looks as though they've switched their figures round, and it should be 1,600. So our VAT has been entered incorrectly as 6,100, but it needs to be 1,600 instead. So what do we need to do? So we need to, first line is to remove the incorrect amount, record the correct amount in the second journal, and then clear your suspense in the third. Now, without doing very much, you have got the amounts for those three things. So we know that the incorrect entry that we're going to remove is that £6,100. And we know we're going to post it correctly as 1,600. We also know that the suspense has a balance of 4,500, which we're going to put into journal C. So you've got your three amounts straight away. Yeah. You also have your account names as well, because you know the issue is with the VAT account. So we're going to remove from the VAT account for the incorrect, and then we're going to put it back in again correctly. We also know that here we're removing the suspense account balance, so we know we're going to use suspense. So without doing too much, you can get kind of 2/3 of the way through this task without thinking, oh my gosh, I might not be 100% sure of what I'm debiting and crediting. So hopefully, if this is an area that's a little bit sticky for you, that should hopefully make you feel a bit more kind of, oh, this is, yeah, I could get 2/3 of the way there without kind of worrying too much. Now comes the tricky bit. You now you have to pull on your previous knowledge of how we would record VAT from purchases. Yeah. So if we were going to enter these totals, these three totals into our purchase table into the accounts, what accounts would we be using? What would we be debiting? What would we be crediting? Yeah. So our net, I'm showing you this full process so you can see. It would go to purchases as a debit. Our total would go to our payables ledger control account as a credit, where we're increasing that liability. The missing link is our VAT, and that matches what we do with the purchases. So with the purchases account. So we would have originally debited that VAT account with that 6,100. Yeah. So if you know what your correct process is, you can then kind of work backwards. So we need to remove the original debit at 6,100. So that was originally debited, remove it, we'll credit them. We're then posting it correctly. Correct posting for VAT on purchase is a debit. So we've removed the incorrect bit, we've put the correct bit back in. We now just need to get our suspense account removed. The easy way to look at this is to look at what you've done previously. So at the moment, we've got credit entry for 6,100 and a debit for 1,600. The journal needs to balance. So where does our suspense entry go? Are we debiting or are we going to credit? At the moment, we are light on that debit side. So we're going to debit the suspense account, which then means that we've got 6,100 on both sides. Yeah, you see that? So originally that suspense account did have a credit balance, but that's irrelevant. You don't need to know that. Right, couple of quick questions to finish off this task. Okay, we've got another error where a bank payment for £10,000 for a new car, that's an asset, has been treated as motor expenses. Okay, so we've got two journals. We need to remove the incorrect entry in this first one here. And then we need to post it correctly into the journal in E. So with this, we have to think about what they should have posted or where they should have posted and what they did post. Yeah. So we've paid £10,000 out of our bank for a car. Yeah. So we know that they should have put a credit entry into the bank. And therefore, they should have debited motor expenses. What have they actually done? The credit to the bank has happened because there's no mention that that wasn't done correctly. The issue is that they've recorded it the motor car asset account. Oh. Yeah. So what we need to do is remove that. Yeah, so that's what we're going to take out in D. And then this is what we're going to do in journal E. So we know we're going to be taking it out of the motor car account and the bank. We're going to go wholesale and remove it from both. We're going to do the opposite of what we said in that did thing. So they originally debited the motor car. To remove it, we're going to credit it. Originally, they credited the bank. But to remove it, we're going to debit it. We then, for journaling E, we're just going to literally copy what we've said in that should bit there. We're going to put the debit in at motor expenses and credit the bank. Again, for that £10,000. So what we've done is say, right, bring it out of the asset account, put it into the expense. We've literally got one little bit, which I'll just do with you. It's just a very true false one, or whether it's an error. So we've got 3 different errors here to finish off with, and we have to decide whether they will be shown or disclosed by the trial balance or not. Sorry, I'm just seeing whether not the other way around. No, it's not that they have made an error in posting it to the wrong way around. They've posted it to the wrong type of account. So what we're doing is taking it out. So this is what they did do, and we need to therefore reverse what has happened up here. Yeah. Sorry, yes, you're right. Sorry. See what you mean. I thought you were saying about, yeah, sorry. Yeah. I see what you mean, yeah. A quicker fix than I thought. There we go. Yeah, I see what you mean. Right, we'll go on to these errors just to finish off. Okay, so we need to decide for each one whether the error has been disclosed by the trial balance or not. So with these, you're looking for particular keywords that will say, oh, hang on a minute, that's not right. And therefore it will be shown in the trial balance, or it might not. Okay. So we've got first one, the payment of rent. Okay, so we've got a debit in the rent expense account and a debit in the cash account. What do we think? Will the trial balance show that or not? Yes, spot on. That would be disclosed. Yes, we've got 2 debits here. Yep. So it would definitely be an issue. What about this one? It just says recording a payment of rent, we won't be paying rent, as a credit to the rent expense account. Yeah, that is another one that's disclosed. We've got no debit entry mentioned, so it looks like it's just a single-sided entry. So yeah, that would be disclosed. And then our final one, we've got a payment of rent again as a debit to the telephone expense account and a credit to the cash account. What do we think? Trial balance will show that or not? Yeah, we had to have one that was not disclosed, didn't we? Yeah. Even though they've posted it to the wrong account, they've posted it to telephone expense rather than rent, we have got a debit and a credit. And they don't mention amount, so we can assume the amount is the same. So we're still going to have a balanced trial balance. It's just that it's in the right account. And that is the end of task 6. It's been a bit of a marathon tonight, just because it's 2 fairly in-depth tasks and we've had a few tech issues. So thank you for your patience. I'm sorry it's not quite gone as I planned. Yeah, we're going to do 7 and 8 next time, which is on Monday.